Silver has been the best performing commodity of 2016, and in appreciation of our listeners, Palisade Radio and Palisade Research are giving away a free American Eagle 1-ounce silver round each and every week for the rest of the year. Just visit palisaderadio.com and enter your email for a chance to win. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. A quick announcement, we have our silver giveaway going on right now. Just go to palisaderadio.com and follow the pop-up. Input your email and you'll be entered to win a 1-ounce American Eagle silver round. Share with your friends and followers. The more you share, the more you win. Now, back on the program with us today is Don Coxe. He's the chairman of Coxe Advisors. Don's based out of Chicago, but we are recording in person today from Niagara-on-the-Lake, Ontario. For those who do not know, Don is where the show all started. In fact, just a few hundred feet from where we're sitting right now, we recorded the first ever episode of Palisade Radio, and since then we've grown to over 15,000 listeners and almost 1 million views. Don, thanks so much for your part in getting the show started, and thank you for coming back today.
I am glad to be a small part of a success story.
Well, you gave a talk yesterday, which was Friday, July 22nd, at the golf club here in town. It was a nice group of people, and the discussion was an overview of where you see the economy going. You talked about bonds, the stock market, and our favorite yellow metal, gold. I want to start off with what was a very important part of your talk, and that's what you're seeing happening with the negative rates in the world and the implications that has right now.
Well, I did not think I would live long enough to see an entirely new asset class created, which is a negative asset class, not a positive one, and where there seems to be no limit to the ability to create more of them. And what it does is basically challenges the capital asset pricing model, which is the basis of all actuarial valuations of pension plans. So this negative yield was something that Mario Draghi came up with of the European Central Bank on the basis that he was going to do whatever it took to get the Eurozone moving again. And the first experiment had been done by the Swiss, who were trying to suppress their currency from going higher. But the Swiss are entitled to do these kinds of things because they're self-financing. The amazing thing has been that this new asset class is multiplying like bubonic plague germs were in the 14th century. And there seems to be no limit. And what it does is it forces up the value of other assets. So we've got the stock markets going to new recovery highs without any good economic news to justify it, and the companies are still buying back their own stock. We have bond yields of real bonds going to new levels, and so what we have is an unfolding crisis for Social Security and pension funds around the world. Well, I might take Japan out of that because in one sense they've been in this position of virtually zero yields for a couple of decades. However, the negative yields are such a challenge to the mathematics of wealth accumulation that we can say that in all the time that we've had since coins came into existence, which is roughly seven centuries before birth of Christ, that we have an asset class which is a negative, and so that the asset classes in the past of gold and silver, which were used in coinage, at all times they did not give yields, and they were measured in returns against what you could put your money out at. And the story of the parable of the talents in Matthew is one that I would recommend that all serious investors look at and read. It is the first, as far as I know, recorded discussion of how you invest and how the time horizons come into it and how the risk factors and inflation come into it. You may say, well, Jesus doesn't mention all those things. No, it's all implicit. But when you go through it, you will analyze it, what you will see is that the two who took risks putting their money out into the market, and they doubled their money in 1 year, we must have had very high inflation indeed. So that was an example of where the inflation rate, what the interest rates are, these are the things that you analyze in pricing something that doesn't pay you income, like gold and silver. So now we have a situation where the fastest growing asset class is one that not only doesn't pay you, it won't even pay you back. 2 weeks ago, I think we collectively in the world saw something that I never thought we would see, and something that centuries from now people will be looking at and marveling at. Switzerland issued a 50-year negative yield bond. That means that the Swiss are saying nothing good is going to happen to the economy for 50 years. Now, if you want pessimism, you got it. And if you want pessimism, gold tends to be of more attraction to people who are pessimistic about the outlook than those who are optimistic. That's the answer to your first question.
Well, that paints a very good picture for gold. In a world of negative rates, gold pays higher than something that pays you back less. But we were talking last night about the stock market, and the stock market is getting to lofty valuations, but as compared to gold or bonds, it at this point pays, I think you said, about 2.5%. Why would somebody look at gold instead of going into the stock market?
Well, the reason for that is that we had 3 quarters in a row of down earnings for the S&P, and now we've actually got positive earnings. But to have it trading near one of its highest multiples ever in a circumstance where nobody is predicting economic growth above, at the most, 2.5%, that's the most optimistic. And there's been very little capex done by the big companies other than buying each other up or buying back stock. So there's nothing embedded in this to justify the price-earnings ratio except the dividends. And the dividends are being financed by issuing extremely low-yield bonds. So the company's balance sheets are deteriorating. You may say, well, they should be. If they can borrow money at 1% and pay a dividend then out to 2%, it's a good idea. But again, you always have to say, if you replicate it fully, will lead to disaster, you got to be careful about using that remedy, whether it's a pill or something else. So saying that you're borrowing in order to pay dividends and buy back stock is, if that is your only formula for giving rewards to investors, then at some point what you're going to have is a major stock market sell-off. And nobody can predict that, but what we can say is that the capitalist theories are all being challenged simultaneously. One is that every asset class has a return and you measure their risk against each other. 2, that the purpose of companies is to achieve growth over the longer term, and in the meantime, to keep stockholders happy, they pay dividends to stockholders and they pay interest to their bankers and bondholders. That's been the process since Adam Smith invented capitalism. So now we have a situation where all these things are falling apart at once. And this is, again, I'm an historian, so I'm very cautious about saying, there's something new under the sun. Ecclesiastes rejected that long ago. But in this case, not only is it something new, but the fact that it's multiplying like a bad germ is a sign that there will be some kind of big correction coming up, either in the economy or in the stock market or both. But that none of this is negative for gold and silver. In fact, it may be positive because of the valuation of financial assets. Given the sheer scale now of government debts that are out there, after all, we've doubled, more than doubled the U.S. government debt since Obama came in. Imagine that. This country's been around since 1776, and he managed to double the debt that was accumulated up to 2004 in a short space of time, of which a big part of it is student loans which are of the kind that are devastating for the students. They don't graduate from school. They've got a debt that they can't escape from, so they're driven into crime. I mean, so the social costs are enormous. But what we have then is all these kinds of things which are telling us that optimism could be expensive. So then you say, well, what is the alternative other than going short? Going short is an extremely risky prospect, as we've seen. When you've got the corporations getting together to buy up their stock, you as an individual investor saying, well, it's overvalued, so I'll go it short. At some point, you may be right, but you could go broke before that happens. The advantage with gold and silver is that what you have is, as we've seen so far this year, I mean, gold and silver are two of the 3 or 4 top performing asset classes in the world so far. And people say, how is that possible? There's no inflation out there. Well, there's some things that are worse than inflation. So that's, I think, the fact that sometimes you have to go out of the box to find the answer. And in this case, going out of the box was creating an asset class which not only had never existed, but nobody ever thought it could exist. And the fact that it's expanding at this rate is a sign of deep weakness of a kind which the correction, when it comes, is going to be painful. So there has never been such a reason. So I'm doing a book on gold, and the reason I chose to do it was frankly because I realized that the basic argument for it had changed when we got to negative yields. But when I started writing it, the total amount of negative yields out there was $2 trillion. And the book won't be coming out until September. By then, some people are estimating the amount will be over 30 trillion. And so that, as against all the other topics that I discuss in this, means that people have to look at gold from a new perspective. I mean, people say, well, do you need a new gold book? There's lots of them. Well, I'm not going to challenge the people who are much more knowledgeable about gold mining and so forth, which is what these books are primarily about. I am talking about gold's place in investment portfolios, gold's place as an investment solution, and that there is a new environment. And if it had not continued to multiply, I might not have decided to go on with the book. But now that I see that it's expanding, I think the argument becomes more cogent. And by the time I think we've completed it, I think we're going to have further evidence of the corrosion within other asset classes. So that's been my objective since I started writing the book in April.
Well, Don, there's not much merit in trying to predict the future. But, these negative rates, is your feeling that by September we hit 30 trillion? Will the United States at some point be issuing bonds with negative rates? Do you think this is a trend that will grow for many years to come? And what could reverse something like this? Because I think it'd be very hard to come back from negative rates.
Well, since we have no precedent for this, historians always search for a precedent to anything. If you're trying to say what's going to happen to America if Hillary Clinton is elected, what's going to happen if Donald Trump is elected, and historians go back and look at comparisons with other kinds of radical presidents in one way or the other. Here, we do not have a precedent, and therefore you can make a case that there could be a rush into gold of unprecedented dimensions of a kind that would actually trigger for long-term investors some selling. But it is such a minute asset class relative to the ability of governments to expand their debts. I mean, look, when you add all the government debts together and you add the growth in corporate debts, which is growing far faster than corporate earnings, so debt has been growing so far faster than output. So that's going to lead to some kind of conclusion of the negative variety. We saw what happened when gold got overvalued because of Grexit. Imagine that. It was Greece that drove gold to $1,900. 2% of the GDP of the EU. The EU is going to have some problems in the next 18 months or so, which are going to make the Greek problem look truly trivial. So that is the second basic situation, and the fact that the EU is able to borrow with negative yields with all the financial problems they have carries us into Alice in Wonderland. And if you go back into Alice in Wonderland, what they do is it's all paradoxes. And so what we've got is paradoxes being used as the basis of economic management. It'll blow up at some point. We just don't know when.
Well, one would think that if gold is on the rise and you're a gold bug of sorts at this point, you would like the gold stocks. Is your preference at this point investing in the metals, or are you investing in the companies that produce and explore for the metals?
Oh, you should invest when you can see a major bull market unfolding. You should concentrate on the companies. And so I discuss in the book how, for people who have not done this, how you can yourself look at what the criteria are. And year to date, the mining companies are up, as we talk, roughly 95%, depending on which index you use. And gold's up like 26, 27%. Silver has outperformed it. What's interesting is we're now getting a classic response, which is that silver underperforms when you're coming off the bottom and then moves into leadership. And that's because a new class of investors, savers, speculators is coming in, which is those who can't afford to buy the high-priced metal. That's what happened back in the 70s, and we're seeing the first signs of that. That is a confirmation that we are in a new bull market. If silver had not joined in that, I would have put in the book a saying basically, if by the time this comes out, silver is not doing well relative to gold, be cautious about investing now. So silver, there's two reasons to be interested. First of all, you can get some good silver mines, although they're being highly priced. But secondly, you need that as confirmation that this asset class, precious metals, is now, after terrible, terrible sell-offs, finally going up. You cannot afford to buy gold mining stocks if the price of gold is going down, because you just get trashed. So therefore, you have to have, if you're going to go in the mining stocks, you have to have a view that things are going to get better for the price of bullion. But you're going to make more of a return and more of a predictable return by buying the stocks.
In terms of a commodity bull market as a whole, you brought up the point that oil is not performing very strongly right now, and you have reservations about how it might perform moving forward. With oil being such a large component of the commodity business worldwide, if it doesn't move, you were, I think, indicating to me that maybe the commodities as a whole would struggle to go into a bull market.
Yes, I think that it's not a circumstance where you can get really optimistic now about commodities. We're responsible for managing 2 commodity funds which trade on the Toronto Stock Exchange, so I have to be careful about what I comment. But I can simply point out that oil at $45 now is selling at a lower price than it was back in the 1970s, whereas gold is selling at a good price relative to the 1970s. And the collapse in oil prices is due to that basic rule. The solution to high commodity prices is high commodity prices. And with vast new production coming from shale, as recently as 2007, the top forecaster on world oil prices, Daniel Yergin, was giving a forecast for oil prices through to 2020. He did not bother mentioning shale oil at all because in his view it was just likely to be a flash in the pan. Shale oil turned out to be that big thing at the margin, which plus the fact that the Saudis decided to go flat out trying to stop the Iran bomb deal, or if Iran did get that they would not have the cash flow to develop nuclear weapons, because they're convinced, as I am, that they will get nuclear weapons. They will be able to evade all the inspections easily. So it was Saudi fear of Iran plus fracking that led to the crash in oil prices. And now demand is caught up with that, and so it's a sideways thing. But those people who are talking about $100 oil, it could happen if there's a revolution and collapse in Venezuela, if Nigeria has a revolution and collapse, then it could happen. But we need a couple of catastrophe stories now. The shale producers have learned so fast. Matter of fact, there's few precedents in scientific development for how fast they learn. And the reason they have learned this way is because this is the first time in the oil industry's history where big oil couldn't just grab up the tracts, drill holes, and not share the drilling results so that they would know which land to buy. The way it's done now is they come into a region and everybody shares through core labs the analysis of what's down in their holes. So by sharing all this as opposed to competing with each other, they accelerate the growth of knowledge. So what might have taken a decade before gets done in 2 years now. Again, this is an amazing paradox when you think about it. Capitalism is based on competing. In this case, capitalism is based on sharing.
Very interesting. Well, I want to ask you just a couple last questions. There were questions posed by audience members at the talk yesterday, and there are things on people's mind, and I just enjoyed your answers to them. The first one being the election in the U.S. You discussed a feeling of indifference on this time around.
Yes, I mean, it's I think that on balance, one should be a supporter of Hillary Clinton as against Trump, but the option for a lot of people will be to back the Libertarian candidate, and this is what happened in two earlier elections. The left voted for Ralph Nader in 2000, and that's why Al Gore did not win that election. And the right voted for a radical right-winger, Ross Perot, and that's why George H.W. Bush was not reelected. So I think that for people who are looking at these two deeply flawed candidates, voting for a minority would be an option. The problem that Hillary Clinton has is problems that are likely to get worse, which is more revelations about past dishonesties. And the problem that Trump has is he's not organized, and he makes preposterously unrealistic statements, particularly on foreign policy, so he scares people. So, but it's part of a process of radicalism which is going across the world. It's going on in Europe. Brexit, which I think was the right vote, but that shocked the elites. And the elites did not take Donald Trump seriously. The elites are betraying us. And the elites go to the Davos conferences, they talk to each other, they fly in their corporate jets, these kinds of things. And Republicans and Democrats alike, they all know each other. The differences between them at that level are not important. So what we have then is a situation where a great part of the population in both Europe and North America says we're losing out from immigration, we're losing out from free trade. Your policies are designed to protect your business models, not us. And that is the core of what's going on in this election campaign. The fact that Bernie Sanders, a Marxist so much that he actually honeymooned in the Soviet Union in 1988, just before the Berlin Wall fell. I mean, you can't make this stuff up. And he actually nearly beat Hillary Clinton. So then Trump comes out of nowhere, out of his own TV show. And again, the idea that he could knock off all these, preposterous. So what a wise man will do is say, I'm not going to predict the result, but I'm going to tell you is that a huge percentage of the population is going to be deeply unhappy with the result, whichever way it goes.
Okay, and my final question, one word, Tesla.
Well, Tesla exists only because of government subsidies. It's a classic example where you use the so-called chic skills of Silicon Valley to say that this is something that's going to improve the environment. And as soon as you say improve the environment, you can get unlimited amounts of money out of Washington for that kind of cause. And it is uneconomic. It is a situation where these kinds of batteries that they have are subject to extremely high risks. I've spent time talking to physicists about that, and they say this is a problem that they do not think he was going to be able to solve soon. So there's doubts about that, but mostly it's designed to appeal to the egos of the elites. This is the elites, once again, talking to each other. We buy the same cars. Oh, and by the way, the taxpayers pay about 1/3 of the cost of the cars to us. Don't we run things well? We help the environment. We get this money from the dumb taxpayers who are buying Chevrolets. We live well. That's Tesla.
All right. Well, Don, thank you so much for coming back on the show. It's been a true pleasure to have you on, and hopefully in a couple of years, with gold much higher, we'll get you back on again.
Good being with you again, Colin. Thank you.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?